tap into. So we will see the same investors who have not been able to get opportunities to invest in, our local government bonds to invest in our euro bonds, which will go very well.
Talking about tapping, the Nigerian banks too have been tapping into this market, about 3, 4, 5 of them, to one about as far back as 2007. Now, you know that Fidelity Bank did one recently, $300 million US. First Bank is thinking about one, also 500 million. Diamond Bank, United Bank for Africa. Now, for these banks, what does it mean for them when they issue euro bonds? What do they do with it?
All right. When they issue euro bonds, what they do with it is to fund foreign debts, foreign loans for people. Now, we're at the position now in Nigeria where we want to do both oil and gas. We have a lot of all our multinationals selling part of their oil fields, and Nigerians or indigenous people buying it. Now, it's important that these banks need to raise money to support the companies ready to buy. We also have a lot in form of the power reforms coming in. We've got the DISCO. We know that infrastructures on our power needs a lot of capital expenditure, and most of these things are not produced in Nigeria. So what we'll have is that we'll have all this foreign or Eurobond money being used as a form of debt and loan to give out to all the winners of this infrastructural.
Okay. So, because it seems like they're doing the same thing that the federal government is doing. So are they borrowing money to give people as loans, or people who want to take debt to help them pay that debt?
No. What they're doing is to support those who have won, who they will invest for them.
In the power sector.
In the power sector. You have the power sector, you have the oil sector, the oil and gas. These are two huge sectors. Before this power reform, what we were having before was just the oil and gas. Now you are also having the power sector. The power sector has a huge opportunity. Now, it will be a strain on any bank not to look for, all these banks who are major players in the market, not to look for international funding facilities, which is longer, to be able to meet the gestations of all these infrastructural issues that they are about to do. So take, for example, you look at you want to bring in terminals. It will take quite a long time. These are huge funds. And how long will it take for you to be able to pay back? These are not short-term funds. You need long-term funds to find it. You're looking at a returns of 3 to 5 years for you to be able to, fully repay. And this is the only way to service such things is to look for long-term debts. And the long-term debts can't only come from local content in Naira. You also need to look for investors who are ready to invest in. So the banks are riding on the good names of the Euro bond that Nigeria has, the sovereign bond that Nigeria has, issued, to also sell themselves. And because all Nigerian banks have, been very successful since the reforms, there's a reason for them to go into the market again. I mean, look at GTB. GTB went out initially, and they've now sold off. When they did it, it was matured and redeemed in 2007. They did at 8.5, and then they went in last year again, and they did it, and again they did it at 7.5. So it's just showing the interest of investors for us to do it. You have First Bank. First Bank did the first one. First Bank did the first one, a 10-year bond, which was in 2007, and now they're coming again for another one, for another 500. And all these banks are major supporters of all these infrastructural bonds. And we also have all these malls being developed. We have the malls, not just the oil and gas. We have the malls being developed. We have a lot of MTN is expanding its network. Dangote Cement. You have all
so the blue chips, heavyweights.
Yes. In form of syndication. So you see them in form of syndications. And if a bank wants to take part in all these things, they've got to look for long-term funds to be able to support all these loans, syndications that are also needed to develop the economy.
I'm a little concerned about, as regards the oil and gas sector, this banks taking money from, foreign investors and giving it to some of these players who, would invest it in the oil and gas sector. I mean, we still have the petroleum industry bill pending, and we know that investors, foreign investors especially, would come in when they know that, when they see some kind of, when there's certainty, when they are sure that the regulatory environment is stable. But that is still hanging in the balance as far as because many of these power stations will need gas. We have a gas policy, but a lot of that that's still contained in the PIB is still not, it's not out yet. It's not official. There's still a lot of uncertainty. So I'm a little concerned if they're going to take that money, give it to these people, and we still have uncertainty around that for now. Isn't that a downside?
No, I don't see it as a downside, because we also look at the fact that the PIB should be out by the end of the year. There's a lot of talk about it because it's holding, like you said, it's holding a lot of things going on. But the oil and gas has a huge potential. It's not affecting the gas. I mean, the LNG is just developing the next tranche of train to move their gas out. I mean, and that we talked about oil and gas. You also heard Dangote saying they want to build a refinery in Nigeria. So, I mean, those are where we will need money, where the banks will have to support all these investors that want to bring in refineries, to build refineries, who want to develop our gas stations. We need gas to be able to power our power stations if we're going to go there. And those are where those monies will all be tilting to. So it's not just towards, generating crude oil to export. When you talk about the oil and gas industry, you're looking about a huge thing. You're talking about downstream, you're talking about upstream, you're talking about gas, you're talking about, all that all in all. And we're talking about refinery, building refineries. And we both agree that there are, there's that infrastructural issues regarding that which has to be addressed. And so those are where those monies will be targeting. The banks will be giving this money. And what the banks are trying to do is to, have equal funding to fund for the same tenor as the assets they are creating, so that they don't, what we call mismatch in our market, basically using short-term funds to, to fund long-term projects. I mean, if you take a Euro bond of 5 years, you're very sure that the refinery or the gas station will be completed in 1 or 2 years. It will start beginning to make returns, and you'll be able to pay. So that is what the banks are trying comfortably to do, to be able to meet, their debt, their loan portfolio, and try and edge against any, risks. And which is where we are looking at.
I suppose the central bank is keeping an eye on all
definitely.
of it.
Oh, definitely. Because for you to do all that, one of the things you have to do is you have to go to the CBN and get some approval. So the CBN is in charge, is looking at all this. And they also know what you need it for. And that goes a long way to kind of improve our reporting and our risk, because that is one of the major things, is to mitigate against the risk of mismanagement, mismatch, which is one of the reasons why most of the banks are going. And it's because, like I did mention, you've got Sky thinking of doing in the last quarter. You have Fidelity who has gone in. You have Diamond who is looking at doing again in form of...
is this cutting across all tiers of the tier 1, tier 2? Is it cutting across all of that?
Exactly. You're not looking at... Because there's tier 1, tier 2, but everybody is looking at tapping into this new potential that are coming in. So it's not like what we had initially. So far we've got Access in already. We had First Bank and we had GTV. Now in this, and then we now have Diamond. We have Sky going in to look at it. We had Fidelity who had a very successful outing, which is very, very good.
Now, on the whole, going forward for the African continent, African governments looking to foreign investors, foreign funds to fund their huge infrastructure deficit, how do you see this changing the continent 5-10 years from now if it's successful? Because we do see some of these developed economies, they're beginning to pick up. Actually, we're seeing China also, well, growth is still slow, but it's still looking good. Financial markets abroad are also looking good right now. Do you see this trend continuing 5-10 years in the event that perhaps the developed economies still do not get back to where they were pre-financial crisis era?
And what I really would say is, I believe we're all going to get it right in Africa. And Africa has a large population. And just like China, we would just be looking at what is happening in China to happen to Africa. Because we've got the population, we've got the land mass, we've got the potentials, which we have not hitherto harnessed in the last 10 years. So we would see Nigeria and other African countries, which is our dream, to be like a Dubai. And what we'll be having is us moving from emerging market, hopefully, to developed economy. And that is where we are looking at. We're looking at Nigeria being one of the financial hubs And for you to be a financial hub, just like the UK and America, you've got to get your infrastructures right. You have to get the right people, and we've got the resources and we've got the people. So I believe that, yes, in the next 5-10 years, Nigeria will be moving from where it is now. We will see all our roads, we'll see our lights, we'll see Nigeria moving into the financial hub of being Africa's, a financial hub.
Now, because of the success rate that we've seen so far,